And that means we are live here on our YouTube channel, Tackle Trading's Halftime Report. We've got a full crew here today to break down the action. And quite frankly, boys, we've got action. Yesterday, big sell-off. Today, big rally. We've got Apple earnings tonight. We got a Fed meeting tomorrow. This is not just another old boring market, Mark. We've got some stuff going on here. First off, how you doing this morning, Marky? Yep, that about describes it. And Noah, how are you doing, my friend?
I am doing much better than Mark. I'm excited to be here. I'm actually
You sound like crap.
I sound awesome. I wish my voice sounded like this all the time.
Yeah. You've got that deep, raspy voice there, Noah. I do like it.
Yeah.
We should cut some audio like intros for the podcast while your voice is like that. I think it would come out very, very well. We're going to have some fun here today, but we're going to break down all the action. Let's start with the stock market if we can. S&P 500, guys, I'm looking at the candlestick here, and basically the size of the candle is matching yesterday's information. Noah, I felt like, yes, this dip was going to be an opportunity if things settled in. We'll get to the fact that they have not settled in, and yet the market is still rallying. I got to wrap my head around that, Marky. But Noah, before we get into the news about the coronavirus and the Apple earnings, just kind of give me a read on that chart if you can.
Well, that there, Tim, is what we call a bullish engulfing candlestick. So after yesterday's big gap down over the weekend, that got everybody excited and potentially a little nervous. The buy the dippers certainly came in and they have erased what we lost yesterday. It hasn't quite filled the gap yet, but it's certainly working on it. And a bullish engulfing candlestick is essentially where the bottom of the candlestick is opening up below the body of the previous candle. Sometimes it's all the way below the low, but at least below the body. And then it's closing above yesterday's open. So we actually have it engulfing and kind of wiping out that loss. So,
yeah, but the intraday, I mean, you're literally coming back into the old candlestick from Friday. So you're at Friday's low, which is kind of a gap fill a little bit. Will you go down to an intraday chart and kind of give me a look at that one? Break that down for me.
Yeah, you bet. I'm on a 15-minute chart here, and you can see the gap that happened overnight. And again, gaps on futures typically only occur over the weekends. And I watched this open up, gap down, and I was watching with bated breath on Sunday night, watching it very, very closely. And, I knew the market was going to be very, very nervous when it opened up. But it formed, looks like a triple bottom. And right at the cash open on Monday, Tim, is where it put in the low.
Mm-hmm.
So right at that cash open, ding, 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 Monday's open, everything that happened Sunday night, basically got wiped back out. And it ended up closing down. So yesterday's candlestick did end up looking bearish, but with today's action and the overnight action, it's erased that and it's put in a couple of higher lows. It's broken the resistance zone and it started to fill that gap, like you mentioned. And now it's right back up into what we see were Friday's lows. So it's not 100% filled the gap all the way back up to where it closed on Friday, but it's filled the empty space in the chart, and it's going to retest that 3280 ballpark level right now.
Mark, something's off here, in my opinion. I see the price action. I see the reversal. We've backfilled into the old gap point. Markets are rallying extraordinarily. And we even had a whole podcast yesterday on the coronavirus where I think the consensus was the risk is real. Be aware of it. Watch the data. Watch the way markets perform. If things settle in, it absolutely might be a buying opportunity. I did not expect this kind of snapback rally here, number one. And especially in the face of, here's some data, Mark. From yesterday when we recorded the podcast, the cases of the coronavirus were 2,800. We're up to 4,500. Exponential growth. Okay.
No, I mean, New York Times, they had a headline 20 minutes ago. Coronavirus live updates, cases up nearly 60% as Hong Kong limits travel from mainland China.
This was the scenario I did not map out in my head, that even if the coronavirus expanded this quickly, that the market wouldn't care. What's going on here in your opinion?
It's hard. The closest parallel I have is once again the trade war. I'm using the trade war absolutely as the playbook to gauge this live event. So, normally when you have news in the market, your normal news cycle is you have a GDP report and it comes out and everyone knows, and you have earnings like Apple, you announced just right at the start. We know when Apple's earnings, and the unemployment report, we know it is. So the normal news cycle is what we classify as known news events. We plan, we're not surprised when they occur because we know exactly when they occur. But then you have some of these unknown news events, especially the type that spread out over a few days. Trade war is the best example we've had in recent years, where you would have a news event and a news event and a news event, and you didn't know the rhyme or reason. During the trade war, you saw crazy price action during some stretches. Very rarely, occasionally, but very rarely, you would have a 4, 5, 6 day trend on the trade war. More of the norm was crazy price action one direction one day, crazy price action the other way the other day. Day traders in the trade war climate, they've cleaned up by simply going with the momentum that day, reevaluating, closing their positions. Next day, wherever the signals were going, they jumped on board. That's exactly what you've seen the last 2 days with momentum. I mean, look where price action closed compared to opening candlesticks. Now, we don't have a close yet today, but closed near the bottom of price action yesterday, rallying near the top of price action today. This is what, like in the height of the trade war, during some of those crazy news stretches, this is the exact type of price action you saw. Absolutely fantastic for day traders, this type of price action. Maddening for swing traders. Because
that makes me feel mad.
Yeah, one day they're like, okay, I'm getting bearish signals. The next day they're like, what do I do? The trade war was really, really tough on swing traders. Day traders, not so much. They love it. I mean, you think about a day trader, day trading signals. They're all in the black today, just making money. Because day traders, they don't care about the big picture. They don't care what might happen tomorrow. They care about their trading signals today. And that has a tendency during these big news events, they pile on and people jump on. And
well, not only that, I think even the market makers, they love backfilling these gaps because they're the ones also doing the scalping and the day trading. And they're the ones who had to sell them yesterday down at the low. Now, they're backfilling their trades. I didn't mean to cut you off there, by the way.
No.
And Noah, I just put a link in the Zoom chat and in the YouTube chat. If you can click that for me real quick and bring up that data. Cody actually shared this with us yesterday, and I find this really fascinating because, I mean, here's the thing. I'm not saying you can't trust any of the news headlines that ever come out of China, but when the state-run media tells us that they're containing it, I am going to scratch my head and be skeptical, especially when the data that I'm looking at is not. That's not the case. Look at the chart on the left, Noah. Okay.
Yep.
That's an exponential explosion of these cases. We've gone from just yesterday, 2,800 to 4,400, and the death count has gone to 107. I know it's a country of 1 billion people and all that kind of stuff like we talked about on the podcast. Noah, why is the market shrugging this news off? Do they just not think there's risk? I mean, are we? What do you think it is?
That is a great question. Why the market is shrugging it off? I think the initial, shock and fear certainly causes the market to potentially overreact. But I think the buy the dippers are just out there. Like, regardless of what the news is, they're going to buy that dip. And I think the algorithms have no emotions.
Mark, there's an interesting idea. The buy the dippers have made money on every time they've done that for 4 months in a row. Maybe they just have that confidence right now.
Well, let's be honest.
Well, it works until it doesn't.
The buy the dippers in a grand scheme has worked for them for 10 straight years. Like on one level or another, it's worked for them for 10 straight years. And so, there is a mentality out there that every dip should be bought. There's a some would consider it vulgar, traders use it often, buy the effing dip. That's what, I mean, it's said in jest, but it's like a real thing. You just buy the dip, you just buy the dip, you just buy the dip. And that mentality is certainly out there without a doubt,
I think this leaves me more at question about tomorrow than I had yesterday, by the way, because the buy the dip has come back with one candle, but Noah, we don't have clear confirmation that we're just going to run to new all-time highs. All we've done is got back what that initial fear reaction was on the overnight weekend gap, right?
Yeah, I mean, absolutely. I mean, part of this is I think might even just be mechanical and algorithm driven. where it just came down to those key price levels and boom, algos kick in and buy the dip. You had two heavy days down with pretty high volume, and then today's volume, even though it's partial session, is up towards average volume already this early in the session.
Mm-hmm.
And it part of it's just technical. Like it's forcing the shorts to cover. Anybody who shorted this, I got stopped out. I put on little hedges using futures. And as the market turned around and rallied, my trailing stops got stopped out, and those were buy orders. So any shorts that are buying to cover, that adds fuel to the fire, plus to buy the dippers. So I think that it doesn't mean it doesn't put in another leg down, or the rally here doesn't run out of gas and we get another scare and it drops again.
Yeah.
But I think the initial reaction is probably not that surprising. Considering that they literally have bought every dip. Like Mark was saying, it's been very, very effective for the last 10 years, and it'll work until it doesn't.
By the way, a very good point that I had not thought of yet this morning here. Jasmine Joe in the chat says, guys, reminder, Chinese markets are closed for the Lunar New Year. So the volatility that might have happened on mainland China within their markets that could have spun something, Mark, they're not even open right now. That is an interesting point. I got to tell you, Monday, Tuesday, we are starting the week off with some volatility. And now here we go. After the bell, Apple earnings, tomorrow FOMC meeting. It is not going to slow down through the week. Let's keep breaking markets down real quick here. By the way, the NASDAQ, in my opinion, is looking the strongest, but almost all of them are identical. They're all backfilling into the gap point here, Noah. Dow, S&P, NASDAQ, Russell. Just quickly flash fire through all of them if you can.
Well, I'll tell you what I like about the NASDAQ here is that it really held that 20. Like it came down and tested it, but by today's that I would say there's not a technician out there that wouldn't count that as a 20 bounce. So I like that. That's got a lot of strength, by comparison. So NASDAQ's looking good. Let's take a look at the Dow. Dow's down below the 20, and it's awfully close to that 50-period moving average. And it's obviously tested some previous little support zones. So, as far as a technical setup, not as strong looking as the NASDAQ, but, that little gap or that moving average pocket in there, it looks like it's taken care of that so far. And then what do we need to look at still? We need to look at the rut.
Russell. Yep.
And the rut, a little deeper retracement still. And this is all the way down to the 50-period moving average, actually hitting off of it. And this is actually kind of an engulfing bearish range where that the size of the sell-off here is much bigger. And it actually started long before Friday, and the rest of this news really broke out. So the mid caps or, the small caps there for the Russell, that's a big drop down. So that's the one I'm least bullish on out of all the indices. And that probably makes those iron condor holders quite happy.
Yeah.
Comes back down, stays back in that range.
Yeah, it does. I mean, if you're a neutral trader and you're waiting for that volatility to come back, it's probably benefiting you today. There's no doubt about it. Momentum shift on that, Russell, just a very subtle notice in that one. Obviously, a little deeper retracement like you talked about. For some people, that's a good thing. For me, if you're a trend trader, not necessarily as a swing trader on the short term, but this market's going to be driven by news. Let's keep moving through the major areas of the market. Go to the dollar next here, Noah. We've had a 4-day rally on this information. And by the way, here we are still rallying on the dollar. Part of this is the expectation of the Federal Reserve being soft on the dollar right now. I'm neutral on this dollar. I've got no other read on that chart besides I see the inverted head and shoulders. I see the breakout, but now we're approaching resistance. I wouldn't do anything in the short term with it, Noah. What's your read?
Well, you put me back out on the weekly chart and you're smack dab between support and resistance. That's pretty sideways overall. And I agree with you. I'm pretty neutral on it. From that daily chart, there's so much support and so resistance surrounding it. It's nice to see it back up above the moving averages. And again, that 98 zone's a big price point. It keeps coming back to. It's almost like that's where that's the mean price. And it's, it keeps reverting back to that $98 middle price.
Yeah. Mark, that chart still kind of the same we were looking at yesterday, just approaching resistance. Anything to add to that one?
Dude, I don't want to spend 1 second talking about the dollar.
I know.
Tell us how you really feel, Mark.
Move on to crude.
Talking about long-term sideways trends is about as exciting as my dating life.
Keeping it real, keeping it real.
Uh-huh.
So you're saying we should swipe right, wait left?
Yeah,
I don't know how it works.
It's when you don't like something, you swipe left. When you
All
like
right.
something, you swipe right.
All right, we'll swipe left.
All right, moving on to crude oil. I got to tell you, finally a green candlestick here with the market rallying. You would expect that risk on attitude. But guys, we're up only less than 1% here, Mark. This is not that impressive of a green candle. Now, could it be the first kind of data point of support trying to hold here? Sure, but when you have this precipitous sell-off and now you're fighting into support, you're trying to hold down here. What are you looking for this week, next week, for you to actually want to do something down here?
I mean, I made on the podcast, I made it very clear. I think this is a very tough trading environment. I think patience is absolutely warranted. If you're a day trader, that doesn't matter, because once again, nothing matters if you're a day trader. The world's ending, the world's euphoric, you're trading your signals. But when you're trying to make more sophisticated moves from a longer term swing position, I have to see, and I'm sorry, and I might just miss a huge bounce, and I'm okay with that. I'm okay with missing out on a trade, but because I will refuse until I see, I mean, call me old fashioned. This new story that spooked the market, cases are up 60% from yesterday. 60% from yesterday. And you're telling me that this is just all done? Nothing to see here? Everything's good? Now, I firmly believe this is day. Go look at copper right now. Go look at Dr. Copper right now. You know, that leading indicator, tell me copper thinks everything's okay. You know, like, tell me copper thinks everything's okay.
Yeah. No, I would be very cautious with any of these commodities down here as well. I'm with you. I mean, crude oil at some point, obviously, any trader, when a major commodity like crude oil is at support, you're going to be interested. Not here on a Tuesday for me personally.
Oh, I'm ridiculously interested.
Yep.
But two things have to occur. One, I have to have that slow down in the number of cases, number of deaths. Because even if, like, one of the scenarios we painted yesterday is that you got two scenarios. Well, you got three scenarios. Everything just magically cures itself. Everything's good. Or you have this global pandemic, which is really unlikely. For example, we haven't seen an increase in cases in the United States. That didn't go up today. In talking through this in the podcast yesterday, I mean, we came to, it's really tough for this particular virus in the way that it's transmitted to cause this global pandemic. But the other scenario, which greatly weighs certain areas of the market and could greatly impact it, is that it becomes an epidemic in China, where cases expand. It becomes a really, really stifling impact on the Chinese economy. Now, that's not the nightmare scenario for overall pandemic where just markets crash and all that, but it certainly will be an albatross around the neck of certain areas of the market like Chinese stocks, crude oil, copper, companies that have heavy exposure to China. Those things could be greatly impacted by an epidemic that's spreading in China. So until you see the number of cases slow down, which the exact opposite happened today. I mean, a 60% clip today. I mean, that's pretty crazy. So until that occurs and you get a true patient technical reversal signal, man, you just got to sit on your hands unless you're a day trader. I mean, I really believe that.
Yeah, obviously. I mean, within my own personal trading, the way I do it, I'm going to be rolling call options and managing my put insurance and all kinds of things. I mean, it depends on your system. Even a day like today, I might not make a lot of new entries, Mark. I haven't made a single new trade today, but I'm still double checking everything, making sure my call levels are where I want them and all that kind of stuff. And part of that is managing my gold position. Let's move on to gold and silver in the metals markets here, Noah. Gold is only down 0.5%. You know, it's backfilling. The dollar's strong. It's above moving averages. I don't think there's anything changing in the pattern there. Now, a breakout above 1600 on the weekly candlestick chart would be significant. One of the tricky things here, Noah, from a technical perspective, is the tail of that candlestick. The tail of that candlestick happened when, that situation with Iran was unfolding, and it spiked up. It had that gap out. It couldn't hold it. How do you decide where a breakout is here when that was an intraday price action point, Noah?
Well, that's a tough one. Typically, when you get a crazy intraday reaction like that, you break it down into the intraday chart and actually look at it and figure out how much of that you can discount. And then what I look for is alternative entry points. So I'd probably back that out, 20 days, 1 hour, and I'd say, okay, well, we know where the high is, but the current high is also a pretty valuable breakout point. And the amount of time it's spent up there and the amount of volume on the print, I would probably find a different trigger price point than wait for it to go all the way up and take out that wick.
Mm-hmm. Mm-hmm. I'm still bullish on gold. Not going to change the opinion in the short term based on anything.
I'd like to be bullish on gold, but I got stopped out of it on the trail stop there. I caught the breakout and saw the doji and tightened up the stop, and it was exciting yesterday for a few minutes.
Yeah, swing traders in an environment like this, they can get whipsawed around, Mark, and that's where trading style.
They can absolutely get whipsawed around. Cash flow traders that have been playing this broad consolidation pattern for months and months and months, they're happy. I mean, they just keep on keeping on. They just keep on keeping on.
Yeah.
Swing trading in live news events, trade war, it is a tough environment. It really, really is. And since a lot of our traders are swing traders, I mean, that's why I have a lot of the sit on my hands approach.
Mm-hmm. That's actually pretty wise, Mark. I'm just thinking about that. And I am, primarily a swing trader. And when the market gets volatile like this, I usually pull positions and or tighten up stops and just sit out. Like I'm not going to put on new trades until I get better clarity on this.
Mm-hmm. Mm-hmm. I'll tell you, there's a couple other really tough patterns in the metals market as well that you might have the same opinion on. Take a look at Palladium. I have been waiting for a pullback on Palladium for a month and a half. Now I have it, and I'm still hesitating. I cannot pull the damn trigger on this thing. I got to tell you, I've missed so many good opportunities on Palladium. And part of it is, Mark, the pullbacks are so violent. It just shakes my money management, kind of instincts out. And I'm like, it's just too risky for me in the short term. I just have not done anything with that. Is this an opportunity that we should be focused on, interested in? What should we be watching? Mark, I'm going to start with you.
Well, I mean, like any deep pullback, I mean, everything comes down to signals and triggers, right?
Mm-hmm.
Patterns, signals, setups. So, I mean, in your playbook, do you have a plan on what's the ideal situation? I'm asking you this question. Do you have a plan, like when you have a deep pullback, what is your signal? What is your guide to help get you in? Because I mean, we have a long-term uptrend.
Mm-hmm.
So, whenever you have a pullback in a long-term uptrend,
sure,
that always warrants consideration because it can be an opportunity. But what's the pattern that you would like to emerge here?
Well, I'll give you the answer. To me personally, this is within my own rules on the way I trade these deep pullbacks, is if it broke back above 2250 here. If you go to the intraday chart, Noah, there's a 9 EMA riding there on the daily. You've also got a pivot point there, and it's going to be about where the hourly in the, moving averages, the 50 period hourly moving average is coming down. It's old support. So if it broke back above there, Mark, I would have confirmation for the way I trade, but the problem is I also have red flags, which don't automatically disqualify my trades, but it puts judgment into how I make decisions. And that's the volume spike on the daily. The size of the candlestick on the daily. A 5% candlestick is not a normal day in the market. Now, I know yesterday was not a normal day in the market, but then it just throws some red flags into where I then have to work through a bunch of other steps to get to where I want to actually take a trade here. And I'm just hesitating. The volatility, the volume, those things are making me concerned.
Okay.
Yeah, that's where I'm at. Silver, by the way,
I want to point out the last two times we've had pullbacks. If you had waited for the following signal to emerge,
mm-hmm.
a close above those daily moving averages and then confirmation the next 2 days.
Mm-hmm.
So look, the last two times that it pulled back, sideways price action there for a few days, then closed above the daily moving averages. You got momentum, the next candlestick, and both times, one time pretty nice and one time just violently just ran up. But the clearing of those moving averages after those pullbacks, I mean, in fact, look at the last 3 times. In fact, look at the last 4 times that's occurred. You have to go back. That particular signal on Palladium is literally 100% on pullbacks in the last year.
Mm-hmm.
So those moving averages are powerful.
Definitely. They are very, very powerful. And I think it comes back to a point of conservative confirmation versus aggressive confirmation. And I even saw some commentary and some questions back and forth in our clubhouse recently from like Justin Driscoll down in Atlanta, who does a few of our Friday features, saying he's been much more successful in this environment, being more conservative, waiting for confirmation. And what, like you're talking about, Mark, a close above the moving averages, maybe the second day to get confirmation and run with those
My
trends.
specific signal that I've tested in these markets is a close and then 10% ATR move above the previous candlestick, the next candlestick.
Yep.
And I mean, you look back at the chart on Palladium, that's 100%. It's a really powerful signal in a trending vehicle. Now, if something's trading sideways, it's a whole different set of rules. But when something has an identifiable trend, like Palladium does, it is a really powerful. Now, sometimes you look, like if you look back in March, it took 2 months for that signal to emerge. Like March, April, May. So sometimes you're having to be patient, sit out, wait for it all to play out. But hey, when you can make as much money as you can by being patient, like I think one of the biggest problem traders have is they get so anxious that they have to do something today, and they're like, I got to do something. Be patient. Pay attention to this signal. In fact, I'm going to talk about this signal in the coaches show tonight. I've just decided. I'm going to make an audible. We're going to talk the coronavirus tonight. We're going to talk about just overall market analysis, and I'm going to teach this signal in the coaches show tonight.
I like
it. If you're not a pro member, great time to set up for a trial. Tyler Craig will be on me. Now, Tyler is a fantastic instructor, very knowledgeable. He'll have his own insight on these trend pullbacks. Trend pullbacks is what we're going to talk about. So it's going to be a really great show. Check it out. Coach's show tonight, 8:30 Eastern.
He also happens to be one of your favorite people to give a hard time for some reason.
Oh, he's a Pollyanna goody two shoes. Like, oh my goodness. He's one of those guys that you're just like, oh my goodness, are you really that good a guy? And I think he is, but it's still like it's still, I still have to be like, oh my goodness, they still make him like Tyler Craig.
Yeah, they sure do. He's a great coach as well. Looking forward to the coach show tonight. That will be a great signal to learn conservative confirmation off of these deeper retracements with some volatility. I think a lot of us can benefit from that. Now, a quick look at silver. I got to ask you boys something. When gold isn't moving and silver is that telling you something? I think it is telling me something, but I want to hear your thoughts first. Noah, you first, and then Mark.
I don't know that it really does tell me much. I mean, I typically expect them to track gold, but I always expect it to underperform gold. And, it kind of always comes back to, hey, silver's the poor man's gold. The silver chart's the poor man gold's chart. It always tracks it loosely, but it always is a little bit behind, and it tends to fall deeper when it falls and not rally as strong when it rallies. But it doesn't necessarily dissuade me from liking the gold chart. I still really, really like the gold chart, and silver's pretty soft, and I wouldn't mind selling options on the futures here. But I'm not looking for a directional trade out of silver.
For me, Mark, and you tell me if my instinct is on the right track. It tells me that the safe haven metal is holding at least, but then the industrial metal is selling because of the economic risk to China.
Listen, you stock traders out there are a bunch of idiots. You really are. You're emotional. You overthink things, and you're just not that bright. I'll just be honest.
Well, I'll admit that straight up.
Commodity traders they have such a better perspective, and price movement makes so much more sense on commodity charts.
Oh, and they're so tough and handsome and witty and all those other things. They're so much better than stock traders.
I don't know about that. I actually think that's probably not true at all, but like, I think your instinct's dead on. It's an industrial metal. You don't see that big a bounce in crude. Go back to crude. I mean, what's it up? Like 0.3%. Like, and that's on. Also, they have an extra catalyst in the oil market where Saudi Arabia, my princes in Saudi Arabia, coming out and saying, hey, open to extending those oil cuts through June.
Mm-hmm.
So like you have an extra catalyst. You have this huge market rally, a huge mega catalyst at support, and you're still not seeing that big a jump. But what else are you seeing? You're seeing silver sell off. You're seeing copper down. Like the commodity market isn't convinced at all about what's going on. The commodity market is like, those cases surged 60%. China's a big consumer of commodities. They're a big impact. So even if this is not spreading pandemic style, which I don't think any of us think it's going to, it just doesn't. The science doesn't. I mean, how it is spread, it just doesn't appear to be that type. But it obviously has the ability to spread within China.
Yeah.
So there's still fears there, and the commodity charts are letting you know that, hey, whatever you're doing in the stock market, you algorithms and you day traders, there's still risk here. There's still risk here.
Yeah, no, I'm with you. Quick peek at Bitcoin. I just want to point out the chart pattern that I'm liking what I'm seeing here, Noah. BTC, ever since they introduced options on Bitcoin, guys, Bitcoin is up about $2,000 a coin from 7K to 9K. Little bit of a reversal pattern developing here, Noah. I mean, you've got that rounding kind of pivot point relationships happening here. 9K would be a swing traders breakout. Probably the more significant level would be 10K. Anything you're seeing there, Noah?
Well, I like the pattern. I like it crossing up above the moving averages. It's clearly got it's a big support resistance zone here at that 90, 200, ballpark. And I would say that that's a big ballpark. It's not just a specific price. You gotta draw that trend line with a wide tip marker, so to speak. But otherwise, I think it does look bullish. And derivatives like futures and options on Bitcoin, in my opinion, make it far more tradable. Because now, you can hedge, you can insure, you can do things that you couldn't do otherwise. And again, the liquidity will probably take time to catch up on those, but it certainly is now. I'm getting more and more interested in Bitcoin specifically because it does have these derivatives on it.
Yeah. Let's move on to some company news here. And by the way, guys, if you're out there watching our halftime report, as always, welcome. Great to have you. Go ahead, Marky.
I've concluded you sound wiser with your voice.
I sound smarter.
You do. You sound more taller. You sound more reflective.
I do.
With this, like when you're talking, it sounds like you have this like reflective intellectual thing going on. Like I think you should just be permanently sick.
I figured it's just like that Friends episode where Phoebe gets the cold and sounds really good. She wants to catch the cold again. Why I know that, I don't know.
And dropping a perfect on-the-spot Friends reference to boot. See, that's the kind of things your voice brings out. We're all just now impressed. We just want to hear more of Noah.
We brushed past the one comment we should have focused on. Noah said he thinks he also sounds taller.
Yes,
which I'm not sure. I'm not sure you sound taller, but I definitely will give you the wiser part of it. Let's talk Apple Computer. And by the way, Mark, I was going to give this big pitch about signing up for Tackle Trading and the thumbs up and the shares. We're good with that. We'll do that later. Right now, let's talk Apple Computer earnings right here, guys. Tonight, Apple gapped down yesterday, sensitivity to China. Now they're backfilling, same way the whole market is. That could be the S&P 500 chart right there, by the way. I read something on, I think, CNBC this morning. I found, obviously something that all of us know. The top 5 tech companies are now 18% of the S&P 500. Apple Computer is the biggest one. They have nothing but high expectations for this earnings, Mark, which gives me caution heading into an earnings report, by the way. They think the sales and the EPS and everything's going to be great. And usually companies try to downplay that before they're coming in. Apple has been running for a long time. What are you guys going to be watching for tonight? Mark, first of all, you don't trade into earnings. It's not part of your playbook. Am I right?
Correct.
Yeah. And you avoid it just because of the unpredictability. And Noah, I know you do some flies and some different volatility plays, but just holding straight long stock on Apple here, would that be a risk you'd be willing to take, Noah?
I'd collar it if I owned the stock and I was worried about earnings. I actually happen to have covered calls on that. So a collar for me is about as neutral as you get around earnings because you can ride through it and batten down the hatches. I like Apple's, overall trend, and I certainly don't mind having the risk. If you have the foresight, one of the best things you can do is buy your insurance. If you do own the stock, buy your put insurance about 4 to 6 weeks in advance. If you paid for your insurance now, you'd pay too much for it. You'd pay a premium. But if you can catch it 4 to 6 weeks in advance before the volatility rises, you can insure the stock and take advantage of the potential upside.
Market maker expectation on the gap is 4%, guys. I would estimate over 4%. Seems like it's in the cards. You've had too much volatility, too much growth. And by the way, if they come out and crush it, it could gap up 5%. Wouldn't surprise me. I don't know. I'm still trying to scratch my head around this one. Here's another thing, Mark. A year ago, this company's worth 700 billion in market cap. It's now worth 1.4 trillion.
No, that's the thing is like Apple owners, when you talk risk, they're like, I'm up 100% in the last year. Like,
yeah,
like, you know, it's been a great run. And this is one of the powers of trading, that even if you weren't a long-term holder, there's been some amazing signals. I mean, look at that breakout that occurred mid-December where you had a little high basing pattern, broke up and ran up, 40, 50 points. Trading is amazing. Like waiting for these good patterns to develop and then getting in. This is never going to change. The last few days, you have to remember this, especially if you're a new trader. These type of live news events that are back and forth and this crazy, these are the exception to the rule. Normally we have a pattern. Now, sometimes it's a sideways trend, sometimes it's a downtrend, sometimes it's an uptrend. In the case of Apple, we are constantly having these gifts given to us where you have clear patterns, a clear plan of action. Last few days have been crazy. Might be crazy for a few more days as well. But if we're patient, and wait, and just if all we did was trade beautiful setups, not marginal, not okay, not I can see an angle here, but beautiful setups like you did on Apple in mid-December, you're going to make a lot of money. It requires patience, it requires knowledge, and it requires discipline. Now, we can teach the knowledge to you, but internally for you, it's up to you to develop those patience and that discipline. Be patient, wait for those great patterns to emerge, and you're going to do really good. And your life could absolutely change in a magnificent way. Acquire the knowledge, but you got to really develop that patience and discipline for yourself.
Yeah, I'm with you 100%. And one of the things that I believe is important to learn how to assess and interpret is a post-earnings gap. Whether you actually trade that earnings in front of it, Mark, I think a lot of prudent traders like yourself would be like, no, thank you, not interested in the gamble. But everybody needs to learn how to read the gap after the earnings. I think that's really important because it happens far too often. We'll be looking at Apple tomorrow during our halftime report for sure. There's a couple of companies I want to look at that had earnings either last night or this morning, though. Beyond Meat, just quickly note it is neutral after their earnings. There's not much else there. BYND, but one of the most popular tradable company, or well, not really that tradable, Mark, but it's been in the news a lot lately. It's now neutral in a range. Anything there, boys?
The only thing I've seen recently on Beyond Meat is that Burger King's had to lower the price on their Impossible Whopper because sales have not been what they expected.
But then I keep seeing these restaurant chains announce contracts with them. Denny's came out and said that they're going to be using Beyond Meat products. So I think there's mixed information. The chart right now is starting to move up, and now you're post earnings.
I think the best advice, because Beyond Meat, it got me a little bit last year. It was the one trade in what I thought was a very disciplined year on my part, where I tried to be the smartest guy in the room because I hate this company. Not that I hate I don't really like their product either. But I just hate companies that don't make money. So I'm just it is a stubborn fault of mine. If you don't make money, I have a hard time. But once again, playing setups on Beyond Meat when they develop, like in October, you had a breakdown where it broke through clear support, and led to quite a bit of sell-off. You had, once again, look at that. Below all of the moving averages for what? August, September, October, November, December. Look what happened the second you got above the moving averages. 5 months below, 5 months hanging out. Look at those little bitty candles. The second you cleared all the moving averages, got that confirmation signal, it ran up 30, 40 points. Beyond Meat can be a really powerful like Apple, like a lot of different charts.
I got to point out a mistake I'm making here, though, because I was reading FinViz and Earnings Whisper, and it had this is earnings date yesterday after the bell. I even saw some headlines about the earnings expectations and whatnot. Guys, there's no telephone on that chart on Thinkorswim. I think they might have pushed earnings. It's not a good thing when companies do that, Mark. If they're extending their earnings or applying for extensions, stuff like that, I usually see that as a red flag. I don't know about you. Is that any data point that you find?
I don't know. I don't have enough data to make a conclusion one to another. But what I do have data on is that you can make money on Beyond Meat, and I'm convinced you can make money on Beyond Meat for years to come. Playing the upside when you get clear signals, playing the downside when you get clear signals, waiting for those signals. I mean, look at that. I mean, give me another explanation other than the power of the clearing of those moving averages as a reversal when you had those itty bitty candles than what you saw when it cleared the candles there. Now, that might just be a coincidence that just happens all the time.
Isn't that the same time they announced their deal with McDonald's?
Well, they've been announcing deals all month, though, and they even had some good positive news in November and December. I think it all just kind of bottles up like that. And Mark, I do think it's a self-fulfilling prophecy in many ways that you get.
Oh, it's 100% self-fulfilling. There's nothing magical about it. It's traders such as myself, algorithms. You know, they get on board. They play the signal. They play the signal. I mean, look at McDonald's here. Like, go back to McDonald's. When it cleared the moving averages, once again, it clears the moving averages a few weeks ago. You have a nice little run up, a nice little, 5, 6, 7 day run up. I'm a firm believer. I spent way too much of my life studying moving average theory, and I'm a true believer.
Oh yeah, no, for sure. I'm a believer as well. There's no doubt. And even some of the moving average signals, you've been sharing some of your data with me over the last couple of years. I've adopted that information. That's the beauty of having a team and a community, Mark. You know, we can help each other. We can grow together because you and I, we're not really competing in the market against each other. I mean, Mark, we're competing against the market itself.
That's why communities like Tackle Trading work. Is that you and Noah and Tyler and Matt, myself, Gino, and all of our students out there. We can all share the very best ideas we have. We can be 100% unfiltered. We can be totally giving. Like, you can't do that in sports betting. You can't do that in poker. You can't do that in a lot of activities because those activities, there is a competition. We're all flies on the wall. None of us matter to the market. We could, we just don't have enough money to be consequential to price movement. But what we can do is we can be totally forthcoming with ideas and signals and theories and literally lift everybody up and learn. I mean, Noah, I've learned so much from you over the last 12, 13 years that I've known you. Gino, Tyler, I have become smarter because I listen to these individuals. And then, of course, I work on my own theories and I develop my own plan. And that's what we encourage all of our members at Tackle Trading to do. We unfilteredly, unabashedly share our knowledge, our thoughts, our theories. And then we encourage each trader to find what works for them. Copy it first. That's understandable as you're first learning. But then develop into your own trading style and take that knowledge. And our community is amazing, and the traders that take advantage of that, just like we have. We're better. Noah, are you a better trader than you were 13 years ago?
Yes, absolutely.
And it's that process, and I don't know.
By the way,
really love our community.
I loved that moment right there, Mark. Very genuine, very emotional. And it absolutely got me all fired up. And you know how like in church where they call for an amen after that? I think whenever we have a natural like that, we're going to call for a hashtag Team Tackle, our official hashtag. In the chat here, guys, it's teamwork to make the dream work. And I love what Mark just had to say right there. Couple quick stocks. And Noah, as we're rounding up here, Pfizer had earnings this morning and they missed a little bit. Very, very big company, very important company for just its sector, drug makers, drug manufacturers, you name it. They had a surprise miss of 3.5%. Stock is down here heavily and really below moving averages, Noah. That's kind of breaking down right now, isn't it?
Everything's up today except for Pfizer. Pfizer sucks right now. It just got beat down on that earnings and it's crossed down below the moving averages. It's broken a key support zone. And that could really set the tone for it. I do think Pfizer is one of those stocks you do buy on the dip because it has a nice premium. It's Pfizer. It's not going out of business. Traders have got to love picking that up at a lower price.
Yeah.
Oh, absolutely. I mean, if you go back to, and I'm pulling up mine now, I'm trying to remember my support levels. If you go back to like a 4-year chart and go to a monthly chart, I mean, you see support levels that have, like, you got a ton of support levels. Like the last time Pfizer came down to $34, I was pounding the table hard as it started to develop a little low basing pattern. A lot of people in tackle trading will remember this, that, I was pounding it because it has like a ton of historical support levels at 30, at 32, at 34. So you got this ton of support levels. So if Pfizer does pull back and you get a reversal signal, I guarantee I'm going to be all over it, because I mean, you just have massive multiple support levels that if one breaks, well, there's only a couple dollars to the next one.
Well, and here's the thing about a Pfizer missing. I mean, they did $12.7 billion in revenue, Mark, and they were expected to be $12.7 billion. So the revenue came in line. The EPS number was 2 pennies off. So yeah, you price in a little bit, but that's a dividend paying company that, yeah, I'm with you. That's your kind of stock, right, Mark?
Oh, it's Pfizer's 100% my type of stock on deep pullbacks.
I'll give you another one that's your kind of stock, Lockheed Martin. I know it's in an uptrend here where we're at elevated levels. So maybe not the pattern to just go out and start loading up the truck. But guys, I got to tell you, they beat again. And in a world of conflict and things that we've been seeing lately, defense contractors are very attractive. Revenue beat, earnings beat by a long ways, 30 cents a share, actually, 6% surprise over the top line and bottom line. That's a great looking chart, guys. I mean, there's nothing else to say, in my opinion. Is that an entry point, Noah?
Well, that's a tough one with the moving average rising. Anytime it kisses off that, I think you just trade this one bar by bar. Like you just buy above the high, stops below the low, and you can probably continue to ride whatever momentum's left in that. Doesn't look like it's slowing down much.
And real quick, couple stocks
I could get used to Noah's voice.
I can.
It's pretty good.
Like I there is something about his new voice that
I gotta keep it.
It just makes me want to listen more. It just does. I won't lie. So I hope you don't get better.
Other than the psychosomatic symptoms where I think I actually have the coronavirus, it's pretty cool.
Yeah, probably not. It's a 14-day gestation period. So we'll give it
I just
ordered
week. I just got this computer from Hong Kong, and it's possibly that the boxes were infected. So
now, if you would have listened to the podcast yesterday, you would have listened to Cody talk about how it wouldn't be possible for the
that doesn't help with
psychosomatic
symptoms. Psychosomatic symptoms are just that, psychosomatic.
A virus cannot live outside a living organism, so it would not survive the trip.
Yeah.
All right.
Couple of major names that we didn't mention earlier. AMD, one of the most popularly traded companies by volume, by activity, by people talking about it. We talk about it all the time. I think it's Matt's favorite stock, at least one of them. They got earnings tonight as well. Starbucks, Xilinx, eBay, Alaska Air, a bunch of them. Mark, this is a busy week for earnings. I don't have to say this to veteran traders, but if you're a beginner out there, make sure you are double checking when your earnings date is. But guys, I got to tell you,
people still use eBay. I mean, obviously some people do.
I bought stuff on there a couple times a year the last few years. There was
I just don't hear it like in people when they talk. I think
collectors, like
eBay come up as often.
I had to go look for some currency notes. I wanted to find some Zimbabwe dollars, and I went to eBay to find them. So
like niche items that like collectors, that makes sense. Sure, that makes sense.
Yeah. Boeing earnings tomorrow, guys. It has been one of the most trending, talked about companies in the marketplace. We're going to have a busy day. We're going to have a busy week, and we're going to keep breaking it down for you day by day. What are you more interested in, Apple or Boeing here tomorrow, guys? AMD, maybe throw it in there.
I think Boeing's got more drama surrounding it. Apple, I think, is just how well they did. Boeing, on the other hand,
I mean,
who knows?
I mean, you talk about we talk about this like ongoing news story. I mean, that's how we've been talking a lot the last few days with the coronavirus and trying to draw parallels. I mean, Boeing has been one continual ongoing news story for a year now, with news popping up, and you don't know when. It's just like, and look at the price action. I mean, that's tough price action to trade. That's been tough price action to trade over the last year.
Well, you could have position traded it slow, probably. I mean, if you would have got behind that negativity and really believed in the storylines, just said, hey, I'm going to play put options, I'm going to do cash flow bearish. I didn't really do that. It's not been a great swing trading candidate, Mark. I'm with you 100%. But I think the casual meandering down the chart stuff, I had to tell you, back it out to the weekly, guys. Because I think this Boeing news is going to be significant. To answer my own question, I'm more interested in Apple because of what it means to the market. But if you had some kind of movement, either direction from here, a gap upward just cements it as neutral. What if you gap below 300? What if you sell significantly here? I mean, that could really violate long-term support levels that have been holding for a couple years now, Mark, even through all this news. And it's significant. We'll keep an eye on it. We'll look at it tomorrow, see where we're at. But big news this week. And by the way, we didn't even talk about the Federal Reserve and the inverted yield curve today. The 3-month 10-year note inverted. The 2-year 10-year is close. It is flattening.
Oh, so let me get this right.
Yeah.
Yield curve inverts. Cases of coronavirus up 60% overnight, and shows you the power of algorithms.
The funny thing, the stock market in the short term is that.
That's why do not try to think about it. Like don't.
This market's been reminding me of the honey badger. It just don't care.
That old
Inverted yield curve. Honey badger don't care.
First of all, whenever I hear honey badger, though, I think about that football player who plays for the Chiefs. And by the way, I saw Super Bowl tickets going for $9,000. $9,000 Super Bowl tickets.
Oh, I saw some $40,000 package that includes the tickets, but it also includes car service and other fancy things. But a $40,000 Super Bowl package. Who's with me? Let's go.
I wouldn't pay $9,000 to play on the kickoff team.
I would pay $9,000 for you to play on the kickoff.
No, I would. Listen, if I got to play an NFL snap, okay, now obviously I'm almost 50 years old and I would die the second somebody hit me. But assuming I could guarantee my safety to play and I definitely would pay $9,000 to play an NBA. Like, would you pay if you got to play 2 minutes in an NBA game?
Can I get a shot off?
Yes.
As long as it's a granny shot, I'm in.
I would I'm sorry. That's why we work hard, isn't it?
All right. So I got a question for you. I'm with you. I understand the logic where you're going. I like this. So if you do pay for the NBA 2 minutes, are you more likely to hack somebody really hard, send them to the line?
Heck yeah.
Or take a charge?
Oh no, I'm old. I'd get hurt.
I'm likely to pass out on the court from a heart attack.
See, I could hack someone because I'm the one. Even I'm probably not going to do any damage, but I'd feel manly for a moment. Take a charge. I might that would hurt.
Do you think you could foul out in 2 minutes?
Yes. I would definitely pay $9,000 to foul out of an NBA game in 2 minutes. I'd sign up. But
so worth it. Yeah.
To sit there and watch a game, I don't know, man. I guess it just doesn't matter enough to me.
Yeah. I'll do it from TV, sit here at home and have some ribs and enjoy myself. I ain't paying $9,000 to go sit on
what
the
would you pay $9,000 to do, Dr. Noah?
Oh, so many things. I've got a bucket list. Mostly I just go travel because $9,000 can get you a lot of cool places.
Yeah.
Probably could,
Yeah. Nice trip across Europe. Go spend a month in Spain. Go see all your old people. You've done that in the past. Yeah, I could see that. Yeah. All right, guys, we are done here. Great job, Noah. Great job, Mark. A lot of fun in the show here today. We've had a back and forth 2 days in the market. Come back and join us tomorrow. If you're still watching right now, give us a thumbs up before you leave. Share this. Get the word out. If you're not a member of our pro community, we have a 15-day trial in the comments below. No reason to hesitate, guys. Go see what we do in the coaches show here tonight with Coach Mark. He's going to be talking about the coronavirus and that very specific signal on those deeper pullbacks. Get in the game, guys. We'll see you guys tomorrow.